In today's seminar, Reliable Profits for Risk-Averse Investors, Ian's going to share with you some specific investment he's making right now to help investors protect their wealth and be positioned for recovery when it comes, to make profits right now. But first, we're going to talk about a few sectors that we think are attractive opportunities for investors today.
Yeah, a little later on, I'm going to share with you 3 of my top investment picks. 1 fixed income investment, 1 equity investment, and 1 trade that I think can make you some big profits today.
So I know we're thinking about commodities for 2009. I mean, they're definitely washed out. Any thoughts on the commodity markets these days?
Yeah, Britt, there are 2 primary themes that I see as being opportunities for investors in 2009. The first is global growth, and the second is commodities. I think commodities is a great place to be invested. There's certainly a correlation between global growth and commodities. I see global growth expanding in the next few years. If you look at data, countries like China continue to grow even though the U.S. Economy is in the toilet. And this is really going to be an area of growth moving forward. Granted, the world is certainly flat. All world economies are slowing down in terms of growth, and those like the U.S. are even contracting. But global growth is a theme that's going to be here for the next decade, and individual investors seeking growth need to be looking at opportunities in the emerging markets.
Right, and we know that China drove the commodity boom the first part of this decade, sending prices for copper, steel, oil, pretty much everything sky high. What about China now makes you think that there's going to be some still growth happening in China?
Well, you know, China's passed a stimulus package back in late 2008. It's having effects already. World growth has slowed from 13% to 9% last year. JP Morgan is still expecting 7.2% this year. So if you compare that with the U.S., which is contracting by about 4% in the fourth quarter, that looks pretty attractive. Remember, the last time the U.S. economy grew at over 7% was back in 1984. So looking at this on a global scale, China's growth is certainly dwarfing the U.S. and is well ahead of where we've been in many decades.
And yet the Chinese stock market has been absolutely crushed over the last couple of years. In 2008 alone, it was down about 50%. How do you balance that against their still potential for economic growth?
Well, like you said, the Chinese stock market fell faster and further than the U.S. market did in 2008, but it's also recovered faster. The Chinese stock market, the Shanghai index, is up about 35% from its November lows. If you look at the U.S. market in comparison, we're actually below our November lows right now and are setting new lows. So, you know, the market over there has certainly recovered and bounced back quicker. You know, I don't think now is the time to be aggressively buying emerging markets. I think the Chinese market is going to follow the U.S. out of this recession, and the U.S. market will lead the way. But what that means is that there may be opportunities as the U.S. starts recovering and China starts recovering to selectively be buying some emerging growth opportunities over there. And I think this is a market that's going to be expanding, and individual investors who want growth in their portfolio in the next few years must be looking forward to China and looking for opportunities over there.
And so the first little bit of growth we see from China is probably going to affect the commodity market first, right?
Certainly. Commodities fell along with every other asset class in 2008. However, a bull market for commodities began back in 2002. I look at the current situation as a pullback in a long-term bull market that's going to last another decade. As global growth continues to expand, commodity prices will rise. You know, we see this right now with gold, as well as other commodities like oil, which appear to be bottoming, as well as other precious metals, silver, platinum, and base metals. So across the board, I think we're currently having a temporary pullback in commodities, and long term, the trend is up, and this is a great place to be invested if you believe in global growth, which I certainly do.
Now you mentioned an investment in gold, and we know that's a traditional safe haven too. But we think there's probably also some upside for gold, right?
Yeah, gold is currently trading at $1,000 an ounce, which is a recent high. You know, the price has certainly gone up quite a bit as investors have sought safety for the same reason that investors are pouring money into U.S. Treasuries. They're also buying gold. They think it's safe, which it is. I see the price going 50% higher. I think we'll see gold at $1,500 an ounce in 2009. This is a great place to be invested. You know, we're likely to be going into a phase of hyperinflation once the economy turns around. And I think all commodity prices will rise, including gold. This is a great place to be invested. And in my recovery portfolio, I own the gold ETF. The ticker symbol is GLD. This is a great way to get direct exposure to the commodity. If you think gold is moving higher, GLD is a great place to be invested.
So we know that A weak dollar and inflation helped drive oil prices up to $147 a barrel last summer, and now it's fallen back to $45. Do you see some upside for oil coming?
Yeah, I think oil is going to recover, just like everything else for that matter. But oil is a leading indicator for the economy. As growth returns, which it will, demand for oil will increase, and this will be seen pretty quickly in the market for the price of oil. We've seen oil sort of bottoming here and see the commodity recovering and moving higher. I think this is a good opportunity for individual investors.
So what's the best way to get some exposure to oil? Should we just go right out and buy Exxon?
Individual stocks are certainly one opportunity. Another would be the oil ETF. The ticker symbol is USO. And this ETF tracks the price of oil. So if you think oil is going higher, this is an easy way to invest without having a lot of risk in individual companies. And we know in this market there are companies with a lot of uncertainty, lots of debt-ridden companies that are concerning for individual investors. So buying the commodity is a pretty safe way to play this trend if you think oil is moving higher, which I believe it will in 2009.
So we've talked about a few commodity assets that can be bought now and provide upside gains for investors. Are there any sectors of the economy that you find attractive at this point, Ian?
Yeah, Britt, I think that healthcare is certainly one area that's going to do well under this new administration in Washington, D.C., as will alternative energy.
So the Obama administration is going to be investing in healthcare and alternative energy, and plus we have the baby boomer generation getting ready to retire, which is definitely going to push healthcare stocks higher.
Yeah, I think healthcare is a great place to be invested. Healthcare technology, which has been way behind the times for years, I think is going to receive some stimulus here, and a lot of incentives for that industry to grow. Same with generic pharma, with individuals trying to reduce their costs, and the administration hell-bent on reducing healthcare costs. Generic pharma is a good alternative to name brand drugs, providing individuals with the same drugs at a lower cost. So I think this is a really good opportunity both in generic pharma and health tech.
And we see the same sorts of investment opportunities with alternative energy, right? The opportunity to cut our costs of oil that we spend every year.
Yeah, alternative energy I think is a key for this administration. They want energy independence for the country, and that's something that's a priority. I think whether oil is at $45 a barrel or $145 a barrel. I think it's important to remember, too, that consumers are making changes, and they're not just based on financial ones. Driving a Prius didn't just become uncool because oil is now trading at $45 a barrel and it costs $2 a gallon to fill up your car. Consumers are committed to the idea of cleaner environment here in the United States and around the world, and I think that alternative energy, whether that's solar, wind, power, is going to be a big trend, and those stocks should do well over the next few years. In a few minutes, I'm going to share with you 3 of my top investment picks for today, investments that I think can make money in your portfolio in the near future. One's a fixed income opportunity, one's an equity play, and one's actually a covered call trade that I think could make you up to 20% in the next 4 months.